Hello, chart watchers, and welcome to this Wednesday, June 12th, 2019 Market Watchers live show with your host, Erin Swendlin, and guest co-host today, Mary Ellen McGonigal. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Let's go ahead and take a quick peek at what the market's in and doing right now before we get started. And I'm going to make sure I have this nice and updated. There we go. All right, the Dow Jones is down currently 66 points plus. Most of the markets are down. It looks like about 1/3%. That's what we're looking at with the S&P 500 down 8.66. NASDAQ also lower right now on the day, and it is down 0.55%. Russell 2000 down 1/3% currently. TNX Treasury yields are lower right now at 2.122%. XLE is the sector not having a good day, likely because we're seeing oil, U.S. oil fund right now is down 31 cents. We're looking at $10.80 for USO. The semiconductor index is also is dragging today, currently down a little over 70 points. This is led really by Applied Materials, which you can see is down almost 5%, Micron down over 5%, and then we have Lam Research down $9.86. Dave & Buster's is the one in the news, down 21% today after missing top and bottom line and lowering guidance. So not a good day for Dave & Buster's, but we'll talk about that a little bit more later. Let me go ahead and bring in my guest co-host, Mary Ellen. Welcome to the show. And we were just talking beforehand about how hot it has been lately, but you've had a little bit better temperatures than I have, haven't you?
No, we're hitting triple digits on a regular basis, and it's really keeping the air conditioning running. I hate to do that, but the heat's just been really quite unbearable, even well into the evenings.
I know it was cooling down a little bit last evening, but it looks like the market is definitely cooling down right now. Let me go ahead and bring in our guest today, Tim Ord. Welcome to the show. Glad to have you today.
Yeah, actually, as far as temperature wise, we're not too bad here. So probably mid 70s. So I'm Midwest, so a lot cooler here. Nice weather.
Well, I would like that, but hopefully we'll cool down a little bit here, Mary Ellen.
Yeah.
All right. Well, let's go ahead and get started. What's coming up this week? At this point, tomorrow, you want to mark your calendar. John Murphy is going to be here. And then we have a special guest appearance by Chip Anderson. He's going to show us more about the advanced charting platform. Danielle Shea will be here next week on Wednesday, and Tuesday. She is our options expert, so you'll want to tune into that. Greg Harmon will be in on Wednesday, and Mr. RRG, Julius DeKempener, will be with us on Thursday. I'm getting them all mixed up today. All right, but we're going to start off after our technical news and headlines. Tim Ord will be back with us. 10 and 10, first symbol Apache, and Sector Spotlight will be one of our final segments. And then start typing in some questions for Mary Ellen and I. Somewhat general. I can't tell you that we will answer all of them, but go ahead in the chat room and throw some questions at us, and we'll see what we can get to at the end of the program. All right, well, let's go ahead and get started with those technical news and headlines. All right, key economic reports right now. Well, the May CPI, core CPI, was up 0.1%, which was what was expected. It is the smallest increase since January. And at this point, the yearly core rate slipped from 2% to 2% from 2.1, which is in line for the Fed's target for inflation. And cost of living, which I have up there, the all item is, it was 1.8% versus 2%. So we're seeing a little bit of slowing as far as cost of living. But mostly they've been blaming most of the problems here with rents going up and a couple of other items with energy. All right. Next up, though, let's go ahead and look at some key earnings reports. And I am going to get my trusty ACP tool ready here for you. All right, well, the main one that reported today was Dave & Buster's. Like I said in the beginning, they missed their top and bottom line estimates, and they did guide lower. And I think really the biggest problem at this point, let me go ahead and share my screen since I'm talking about Dave & Buster's here. There we are. And here you go. Look at that bar right down there. That is not a good thing to see. Down currently, like I said, it looks like we were down over 20% currently on play. So they missed top and bottom line. They then guided lower as well. But this was the first earnings miss in 5 years for Dave & Buster's and the first revenue miss in 6 quarters. So it was quite a surprise. And, you know, they're blaming it on the timing of Easter and spring breaks and the weather. What's really curious is that they've improved their food and apparently their cocktail offerings, but it's not working. Everybody goes there to play games and then they leave. They're not regular customers. So I guess they're trying to figure that part out. So anyway, there you go with the Dave & Buster's. And if I go ahead and scrunch this up so we can see a little longer term what that bar really means. Look at this. We're talking about lows here, and I'm going to get my tool here. Yeah. Here is what we were looking at back in April and May of 2018. And you can see we're almost there on that bar for trading on the low of the day. So there is room for it to fall even further. And I was looking at this area of support and notice we gapped down and pretty much started trading below that low. So I would be expecting even lower prices right now. PMO is heading straight down. I suspect we're going to see readings come down here down to that -6 or -8 area. Okay, Lululemon is going to be reporting. So let's go ahead and look at them. They report after the bell. And at this point, we're seeing a 0.36 gain on Lululemon. And here we go. Now you can see back here, it had gapped up. I'm gonna mark that right here. We got that big gap up, and currently we've been trading in pretty much a trading range here. Let's get that to where I can grab. There we go. All right, so we've been in this trading range for quite some time, and it looks like we're sitting mid-range. So, you know, as far as investments go, it's hard to say, of course, what's going to happen with their earnings announcement. And Tom always does talk about not holding into earnings. So this is your warning if you follow that line of thinking. But I do see a flag formation here, and that could bring us up and break us out of this trading range for Lululemon. So, you know, the PMO is trying to look better here. You can see, make that a little bit bigger. It's been trying to bottom and come back up, but we're just not seeing it. And currently it looks like the last reading for yesterday, it has fallen somewhat. So next one up that I wanted to look at is Oxford Industries. They do report as well after the bell. And you can see currently trading at lows, at least for the past 6 months. So I'm going to scrunch this out a little bit and see where we're at. So when we had that decline back here last month, it did take us down below that short-term low that we saw back in April. But there is room for this stock to fall further. There's our lows back in December of 2018 when most stocks hit their lows. But look at this move here. We've got that nice rally, and now we're forming what could have been or could be a very large double top formation coming off of this rally. And if that is true, and it does look like it's broken now down below its confirmation line, I would have an expectation the height of the pattern. And if I want to be a little bit more conservative, I can go with this height right here. So about 72 to 82. So that's a $10 difference. So we would add that, subtract that from 72, and that would bring us down. And we'll make this a little bit bigger again so we can see some history. Oh, This is so fun to play with. Okay, so 62 would bring us right about down to here, which is where we saw the tops back here in 2017 last summer. So certainly a possibility to see that double top execute and then end up with prices all the way down at 62. So something to consider. Red Hat, or I'm sorry, RH is going to be reporting also after the bell. Let's look at a couple of interesting areas of resistance at these lows. That's going to be your next resistance level. Short-term bottom is coming in right here, and that does line up pretty well with the bottoms that we saw back here in April earlier. So we could be looking at this nice bounce. Look at the PMO, looks great. It's on a buy signal. It's coming out of very oversold territory. So I would expect to see further gains here on RH. Even going into earnings, I do like the way this one looks, moving up within that, from that support level, coming back up to test that overhead resistance. But mainly, that's just a really nice looking PMO there. All right, let's go ahead and we'll look at TLRD, which also Tailored Brands will also be reporting. And, you know, we've hit, look at these lows back here. This is from July of last year, last summer, and we gapped down and have been moving lower ever since. Currently, the low trading, it looks like we're trading really at the low. And let's see how long ago that low. Okay, so, you know, if you look back, we haven't seen these prices this low, well, since way back here in 2016, and I can keep going back looking to see where we're at. And let's go ahead and we're going to change this. Let's look at this as a monthly chart, just so you can see. All right, so we can scrunch that out just a little bit more. So you can see that Tailored Brands right now is trading near its lows really since it came out and had its IPO. So I would beware. The lowest price, it looks like, is all the way down here at $1. There's certainly no reason why it couldn't continue its fall. You know, Tailored Brands is in that space, the clothing retailers which has just been hit terribly hard. So I wouldn't be completely surprised to see that fall even further. All right, let's go ahead. I want to look at the sector summary and get an idea of what is leading. So clearly, what are the top three? These are your defensive sectors, with utilities certainly outpacing all of the others with a move of over 1.35% currently for XLU. Real estate also doing well, and staples. Now, one thing I do want to show you, and I'm going to organize this by the scooter really quick. Notice the technology and real estate materials. These areas are leading as far as the scooters. So technology, despite not having a good day, and really if we look in the past month at the percent changes here, energy certainly being hit the hardest. But you can see tech is not that far behind. It's certainly been very mediocre in the past month. Really, the concern should be that these are mostly defensive areas that have been leading the market higher currently. All right, that's all I'm going to look at. Let me look at our scooter for the day. Well. Okay, so I'm just going to go right here to our homepage. There are the scooters. Let's look at the top up. Which ones are making the biggest move? I'm going to go ahead and take Nutrien as our scooter mover of the day. There we are. And take a peek at what's going on. So obviously a really nice move off of the low earlier in May. PMO is rising. It isn't quite in the positive area, but volume, OBV volume is looking good here. And there you go, that big scooter move, pushing it back up, trying to get toward that hot zone. Right now, overhead resistance. Let's go ahead and annotate just quickly, and then I'm going to pass it back to you. Let's see, Mary Ellen for upgrades, downgrades. All right, there we are. So we still have some room to travel before we hit some important overhead resistance. Notice 50 getting ready to cross above the 200. I think this one's looking pretty good. It is a scooter mover. It is moving, and that is the scooter mover for the day. I would be looking for price rise to test that overhead resistance right around $55. All right, upgrades and downgrades.
You bet. Yeah, let's go ahead and get started. Per usual, we do have a fair more downgrades than upgrades, but we certainly have enough in the upgrading space that we can take a look at. The first stock is Alliance Bernstein, ticker symbol AB. And we can see that the stock has been in a bit of a downtrend here lately. This is in line with a number of these asset management firms. May was a very tricky period for the markets, and a lot of these companies did see outflows. So we are seeing the company bounce. It found support at this upward trending 200-day simple moving average. This is a daily price chart. Today's upgrade is pushing the stock up a little over 2%. So if we can close the day above this red line is a 50-day simple moving average. From my work, that would be constructive. The RSI is just breaking up above that 50 in a very positive fashion. MACD, black line up through the red, positive, but we do want to see that breaking up above this 0 before getting more constructive. The next upgrade that we can take a look at, ticker symbol is COMM. And pardon me, we can see that this particular stock, this is CommScope, and it really is down and out. This is a gap down on poor earnings. The stock has really been dead on the mat and trying to reverse. But even with today's upgrade, the stock is down almost 2%. So this stock is very much in a confirmed downtrend. We can see the RSI is down below that 20 level that is oversold. So at some point, there's going to be a lookout for a potential reversal, but we are just not there yet. You're going to want to use history, go back to this December period. These are the kind of dynamics that you'll want to see: the price breaking above key moving averages, pulling these simple moving averages up in line with your other technical indicators. Let's take a look at another upgrade today. This one is Brinker Restaurant Group, and we've talked here recently how a number of these restaurant stocks are doing well. I would argue Brinker has not been doing well. Very confirmed downtrend. Stock was upgraded today, of course. It's up about 1%, but has a lot more in the way of work before reversing this downtrend. We're going to need to see the price breaking up above this 50-day simple moving average as well as 200. We're starting to get that RSI trending upward, which could be positive. We've had a positive MACD crossover, but we will want to see that come up above 0 in order to reverse that downtrend. One other upgrade that we can look at is Juniper Networks. And we can see a number of the networking stocks have gotten hit. We are going to look at another one on the downgrade that got downgraded, but this is Juniper GNPR. We can see that it is close to potentially reversing this downtrend. Your RSI and your MACD are also signaling positively. So depending on the fundamental outlook, this could be an interesting juncture. And one other upgrade here, NXPI. This is a semiconductor, really didn't sell off quite as much as a number of the other semis, and the stock is bouncing from a better position, found support at this 200-day, and it does look poised to potentially turn positive. Again, we're going to want to see this MACD up above 0 and a little more positivity on that RSI. Let's take a look at a couple of downgrades here. One of the bigger stocks that certainly has been in the news here of late is Beyond. Let's just BYND is the ticker symbol. And these guys got downgraded yesterday as well as today. So let's see if we can pull this up. Little difficult to see, but the stock came out as an IPO. It really skyrocketed it up from about 50 to 180, and it dropped about $30 yesterday on the downgrade, but today's downgrade, the stock is actually up 10%. And the reasoning is because while the stock was downgraded, their analyst upgraded their price target. So a little bit of a mixed picture there. We have time to look at just maybe a couple more. Let's look at FIZZ, National Beverage. These guys provide LaCroix which was a super popular beverage, but it has too many copiers and the competition's too stiff. It's continuing to get downgraded. So very, very much in a declining downward phase. All these simple moving averages heading south, not very constructive at all. And then the last one that we'll go ahead and take a look at on the downgrade side is Cisco. And we can see that Cisco was very close to breaking out of this long-term base. It's down about 2% on the downgrade, but net does still look quite constructive as far as your RSI trending upward, your MACD as well. So if we are able to get back up to this 57 level and break out, that would be quite ideal. And in fact, this pullback could very well be a buying opportunity. So we'll be right back after this.
The ChartWatchers newsletter features expert technical commentary about the current market from some of the industry's leading technical analysts. See what's really happening in the markets through their eyes and gain an edge in your own investing. The newsletter is packed full of insightful and educational articles intended to help you become a better investor. Whether you are brand new to charting or a seasoned technical analyst, each edition will provide a wealth of informative content. It's the best way to stay informed on all the latest news, events, updates, and additions here at StockCharts.com. Whether it's a new feature or blog, an upcoming conference, or a special sale, you'll hear it first in the ChartWatchers newsletter.
All right, it is my pleasure to bring on Tim Ord. He is the president and editor and publisher of the Ord Oracle, and you are a fellow market timer like myself, and I know you've been in the rankings plenty of times in Timer Digest. Also, you were gold timer for the year as well at one point. But,
Yep.
welcome, and I think it's appropriate that having been a gold timer of the year that you're going to talk about gold with us.
Yep, I sure am. And okay, I got to pull the screen up here.
I will be watching the chat room for questions. Again, we are asking also for you to put in questions for our final segment, but I'll try and keep an eye on those and ask them as appropriate.
Okay, all right. So anyhow, we're going to look at gold today. We're going to look at the long-term gold and actually some gold indexes, which XAU and GDX. But we're going to go back a bunch of years and look at the bigger picture, where we are in that bigger picture, and what it looks like going forward. This chart is gold going back to 1988, and what we're looking at actually is the bottom window, which is the Bollinger Band width. What it does is measures the width as a Bollinger Band squeeze. In other words, prices of gold are real narrow, and when Bollinger Bands expand, that means the price of gold has a bigger volatility between the highs and lows. So normally you want to invest in something that's really bad, because the volatility will expand, price will move either up or down. Bollinger Band doesn't give you the direction which way it's go. We have to use other indicators for that. But I went back in history and looked at the Bollinger Band width on a monthly chart for gold, and I think it's the blue line. The blue lines represent where Bollinger Bands became extremely narrow. In other words, around 10 or lower. And I drew a red line across the bottom here, showing when the Bollinger Bands get really narrow, pretty much usually a bigger move is about to happen. It happened in 93. The Bollinger Bands got real narrow around 10, and right after that, the market jumped up. Bollinger Bands again got really negative in 95, 96, and actually stayed that way for a long time, but finally the move did occur, and it was actually down to the downside. It happened back in 1999, and Bollinger Band had a little blurb, which is a big move back then. And obviously the 2000, actually it's 2001, Bollinger Bands got negative again, and that started the multi-year rally that virtually was around, looks like about 250, rallied up to around, close to 1700 area, or actually a little bit higher, because this is a line chart, but it actually got up close to 1900. And again, it's been 31 years, or it's been about 19 years since the Bollinger Band got this low. So we're back there again. Bollinger Band's extremely narrow, and it's been 19 years since it's been this low. So we're looking for a big move to begin. And we usually watch RSI monthly. Normally when this is a monthly RSI for gold, when it's above 50, usually you got a longer term uptrend going. When it's below 50, you got a downtrend going. Obviously it turned up in 2001, stayed above 50 all the way into the top of 2011, and stayed below RSI, stayed below the monthly RSI, stayed below 50 all the way into the 2016, jumped above a few months, fell below, jumped above, fell below. And since basically January, the RSI has been above 15 or above 50, suggesting we got an uptrend going here according to the monthly RSI rules. So another thing I want to point out, we compared when the RSI is above 50 and the Bollinger Bands are below or around 10. That happened in 1993, happened again in basically 2001, and it's happening basically right now in late 2018, 2019. Previously, times when that happened, in 93, the market went up about 30%. In 2001, when it gave that same signal, when both the RSI is above 50 and Bollinger Bands were around 10, the market basically went from 250 to 1900. So that's about 600%. Now we're happening that again. So this is kind of a rare event to get the RSI above 50 and the Bollinger Bands below 10. So we think something's developing here. Gold, over the last 19 years is really out of favor. Nobody has really played with it much. So we think it's time to watch this index. Go to the next chart now. And this is that point. You can see it a little bit better here, where the Bollinger Bands is around 10 and the RSI jumps above 50. You can see that market jumped about 50% there. It happened again in 2001. The market, stayed bullish on monthly charts all the way up to 1900 on gold. And again, it's happening right here. The monthly RSI is about 50 with the Bollinger Bands below around 10. So you can see that something possibly big could be developing here. So it's kind of a rare event for both those things to come together near the same time. We'll move on to the next chart. This is some cycle work. Again, this chart goes back. This is the monthly gold again, goes back to 1981. There's a 16-year cycle and an 8-year cycle, and we got them drawn here. It came both cycle lows, 8-year and 16-year, came in around the 2001 low. Again, in the 2008 low, the 8-year cycle, low, pretty much nailed that low. And in early 2016 or late 2015, both 8-year and the 16-year came in right on time, picking that we think a significant low out. The market rallied up pretty good for 2016, but really hadn't done anything since 2016. Virtually even moved sideways. But what's important about this chart, if you take the Fibonacci relationship from the low of 2001 to the high of 2011, gold only retraced 50% of that move down. If it got down to a 61.8% move, then the next rally up at best could maybe test the previous high. But if you do a 50% retracement, a lot of times 50% retracement of the previous rally suggests this market's halfway done to the upside. If that turns out to be true here, it would get an upside target around 2,600. But since it held at 50% retracement level, at least we're going to go back up to the old highs at a minimum, which is 1,900. So Markets building some momentum here. We really haven't gone anywhere for the last since 2016. Been a decent rally up, but we haven't moved really since. And so we think that move, in our opinion, has actually started in January. The monthly RSI, you can see, is holding about 50. We're at 57 the time I did this chart 2 days ago. So right now it's an uptrend. Nobody's really paying attention to this market. So we think it could be better things to come. So the cycle work, both at least at 16 years and up, is an uptrend right now. So the longer term, in our view, is up. This chart is a weekly gold chart. It's not the monthly, but the weekly. And we went back, and if you notice, the Bollinger Band is actually at a 20-year low here. I did this chart, again, 3-4 days ago. And last time the Bollinger Bands were this low came at close to the 2001 lows. But we're even lower now than we were back at the 2002 lows. So we think it's important. Things are coming on gold here because of the lack of volatility. You can see the market's virtually gone nowhere since basically 2013, just moved sideways here. In our opinion, this could be a head and shoulders bottom forming, where the head is the late 2015 lows or early 2016 lows. That's where the cycle work came in. Market bumped sideways here, and now we're bumping against a trend line, which is around 1350, and we got the Bollinger Bands extremely tight, which once the Bollinger Band turns up, that means volatility will turn up in that index, and this index is gold. So we're pushing against this neckline with a Bollinger Band extremely narrow. So that's, in our opinion, we're probably going to see a jump in volatility on gold fairly soon, possibly in the next couple of months or even the next couple of weeks. But it does appear, in our view, with the RSI above 50, that this jump will be to the upside, and it'll push. The scenario will push through the 1350 level. To get through this neckline, you need a sign of strength, which is basically a high volume, a high price move through a resistance area. So we think actually volatility will increase once we get through that line. And to really get through that line, you need a confirmation of a sign of strength to get through it. So we're expecting volatility to increase in gold in the fairly near term here. So that's what we're kind of watching for. But around 1350 range is where that line lies. We're not far from it. So as we start punching through it, you could see a reaction through that line. Here's a GLD, which is an ETF for gold, a little bit easier view to see. And we went back, and this is on a monthly chart again, and we marked the times when gold was up 4 months in a row. And normally it happened in uptrends. There's one time right here the market was up, and it wasn't a downtrend, wasn't an uptrend. It was more of a sideways trend. But in general, when you get 4 months up in a row, that's usually a bullish sign intermediate term. And we had, I think it was October, November, December were up months. And so that's a bullish sign, in our opinion, near term. And you can see where the neckline lies is around 130 here. And we put another chart on here. This chart over here. These lines are price by volume. In other words, this was where all the prices were. It was basically between 120 to 130, going back to 2007. That was where most of the price congregated at, right at this 120 to 130. If you notice, we're sitting right in that congestion area. So once we get through it, that area should become strong support. So if we punch to 130, it'll be a long while before we fall back through it again, a long while. So we're we've got price by volume eating through this 120, 130 area. Again, we'll need a sign of strength to get through it. We think that's a possibility that will happen because we've been up 4 months in a row. We had a consolidation. Now we're trying to rally through that line. If you notice, the month of June so far is up, and May was an up month. So we think could see some volatility very near term.
All right, we do have a lot of questions coming in.
Okay, I'm sorry.
No worries. I'll just ask a few of them, since we are talking about the gold. But would you, do you think silver is going to follow the same projection as gold?
No, yeah, actually, that's a good point. And usually in bull markets for gold, the gold stocks lead percentage-wise gold, and silver percentage-wise also leads gold. So yeah, silver actually should do better than gold. And so far it hasn't. I've been looking at ratios where the silver to gold ratio is historically low. And it's been it has stayed low for the last couple of years, which is very unusual. According to history, silver should outperform gold in bullish moves. So yeah, I think silver will do better than gold.
All right. And then, we're, of course, talking gold. It's hard not to talk about the dollar. So what are you thinking about as far as the dollar, just in general?
In general, I think it's actually going to move lower. I was going to put a chart up on that, and I don't have it right in front of me, but I think dollar is going to gradually decrease over the next 3 years. Doing cycle work, if the 16-year cycle and 8-year cycle keep on working like they have in the past, we'll probably see a peak sometime in the 2022, 2023 area. And I believe the dollar will basically decline to that time frame, where gold will rally into that time frame.
All right, excellent. I'll save some of these others for after.
Okay, thank you. All right, so we talked about this. We're talking about 120 as we're eating through this area. Actually, here's the silver gold ratio right at the bottom. In 2009, we got the silver gold ratio at extremely low level. That actually came at the 2008 low. And here it is again in 2016, which is was a major low in gold. And it turned up, and we've been sitting here, silver gold ratio. Well, it's not been a couple of years, but it depends how you look at it. It's been very low around the levels that normally bottoms, but we're extremely low right now over the last, looks like about 7-8 months. So we expect the silver gold ratio to pick up because previously when it's got this low in this range, silver has been a good buy, and it's cheap right now. So that's a good point. That silver gold ratio. I didn't know we had that chart. I would have talked about it more, but we're at levels historically. Silver's been a good buy. I'll put it that way. Moving on to another chart. This is XAU monthly chart going back to where we got data back to 1984. The window I want to point out is this bottom window, which is a Bollinger Band width. And that basically, again, when the Bollinger Bands pinch, this ratio gets down around 20 or so. And so it picks out the time when the Bollinger Bands are pinching, which is basically in general when the XAU market has a tight range, tight trading range. And so those are the times to watch for the big moves in the market. That happened in 1986, which is got pretty close to the lows. Happened again in late, probably 1989. This was probably 1993. Again, and the major move of 2001 started there. Excuse me. 2012, that was the top, consolidated. Turned, because Bollinger Band pinching doesn't tell you what direction it's going; it just tells you the volatility is going to increase. Well, Bollinger Bands did get extremely narrow back in 2018, came up a little bit, and we think that move is still developing here. I put this in the top of the cycle. We're looking for 2020, 2022, according to the cycle work. So we got, 3, 4 more years to go, we think, in the gold market. And the Bollinger Bands really haven't moved up from the lows yet. Previous times when you got down around 20, you went back up at least around 80 or so. Just eyeballing it here. There's one time it was less. It was looking at about 60. But we're hanging around less than 40. So we think we got a long ways to go on the Bollinger Band before any worthwhile intermediate term top happens. So we think this is still early in the move, we'll put it that way. This is GDX, another gold index. It's a weekly time frame. Excuse us, getting hoarse here. But what I want to point out here, we have a 5, 9, and 13 moving average, and we put it on GDX. And the blue lines are bullish crossovers. The red lines are bearish crossovers. And I just wanted to point these out where it happened. Right now, we're back on a 5, 9, 13 week moving average bullish crossover. And another thing I want to point out, there was a big trading, or a longer term trading range that developed on GDX between 25 and approximately 21. And it bounced around in this trading range for about a year, year and a half, and finally fell through the bottom of that trading range back in 2018. Once you follow through a longer term trading range to the bottom, usually that's a longer term bearish sign. What happened, we fell through it back in 2018. In early 2019, we rallied back up through it. Well, that's called a shakeout. What happens if the market can't hold the previous lows? Well, what it said it will do, will attempt to take out the previous highs. Well, this gives a price target around 25. So the market busted back up above that trading range, fell back down to it in April, May timeframe, and finally, which is support around that 21 range. And now it's turning back up. We think we're heading on a short-term basis here back to 25. We got on the weekly charts. We got a bullish crossover between the 5, 9, and 13. And we also got the RSI back above 50 again over the last couple of weeks. So on a weekly time frame, GDX is on a buy signal, and the next upside resistance is probably going to be around the 25 range. Where we stop there, we don't know, but we think that's a minimum. That's probably where we're heading. So that's something to watch in the weeks to come. And also, if seasonality wise, if May usually doesn't really see a decline, we've seen a pullback, but it didn't really break any support areas. If May holds up, usually that's good for a longer term view. And our thinking, we're probably going to rally into the October timeframe. And we think this pattern that's forming here from the October of 2018 low, that range anyhow, is an ABC up. And so if you do that analysis, you'll come up around 25 also. So we think 25 on GDX is going to be an important area to watch what happens next. This is just a shorter term view. This is a daily GDX. We had a few indicators that we played through, and we found out these work pretty well. The bottom is the GDX advanced decline percentage, and we took an 18 moving average of it. The next one, you can get these indicators on StockCharts. You can see it here. And next one up is GDX up down volume percent, and you take an 18 moving average of it. When both get below 30, usually you're near a worthwhile low in GDX. And we went back, looks like about 2017 here. We marked all the times when both the 18 moving average of the up down volume and 18 moving average of the advanced decline get below 30. And we marked those with blue lines. So it picked out that low, that low wasn't very good, but it picked out that low. Came in here a little bit early, but basically it got a low in August, hit a little bit lower, about a point or so lower on GDX. Gave a support again in November looked like it was breaking down, but it gave another support in November. Kept in that channel, and we had another buy signal that just happened 1st of May, and it got both these indicators got below 30, flipped sideways there at support around that 20. You can see it better now, is around 20 and a half, which is basically the 2017 lows, building cause for the next move up. And for GDX anyhow, it was a pretty explosive move over the last several days here. The market just rocketed up from about 20 and a half to the 23 range. We don't think we're done yet. We think we're probably heading to the top of the trading range, which is around that 25 scenario. So that's where we're probably heading short term. The 25 area on GDX is an area to watch. Our view, we think we're probably going to eat through it, just because the market has been so dead for so long that the sideways move, we think that's been going on for the last several years on GDX, is going to break out, and the breakout will be to the upside. So we can take questions now. We got several minutes. Are you there, Erin?
Yeah, go ahead.
Here, and I know Mary Ellen had a few questions for you.
Okay, well, good.
Yeah, so there was another question that was relating to gold's effect potentially on other commodities, and also looking at the presidential cycle and how that might fit in. I'm not sure if there's a correlation there or not.
It's I know they're lowering interest rates. I hate to do opinions. I'm actually, pretty much, I try to let the charts tell me how to think.
Sure.
And I think inflation's coming. I know they're lowering interest rates, but we've got a booming economy, so the money's going to go somewhere. I think the dollars, but you're asking to give me a lot of opinions. And
Sure. You'd rather speak facts.
Yeah, I'd rather look at some charts and try to interpret them. And I think the dollar is going to get weaker. I think gold and silver is both going to get stronger. And the money's been out of these gold stocks for years, actually since 2011. And every dog has its day. Mm-hmm. And I think at some point, sooner than later, gold is probably going to have its day again. So
it's time in the sun, so to speak.
Yeah, it's time in the sun again.
Yeah. And then, Erin, I know you did a workshop earlier this week with gold, and I believe the gold bugs were shining on that day as well.
Yes, I mean, looking at the long-term charts, I'm right there with you, Tim, completely. It's kind of funny, Tom isn't with us today because he's pretty much anti-metals, I would say in general. But
what markets are made of.
It's like consumer staples to me. It's one of those sort of defensive areas. It's not really sexy, but it's a great hedge in the portfolio. I have to say, full disclosure, I own silver, so I have been kind of confounded by the fact it's just not performing alongside gold like at all right now.
But yeah, if you look at that ratio, though, I mean, you're ideally you're probably in a good spot. I forgot where I had that ratio. There it is. This ratio right here. Going back, I only go back 2007, but when it's got down this low,
it's time, right?
Yeah, usually have been a fairly good situation. 2008, late 2008, that caught that low, and in 2016, it popped up some, and it really hasn't done anything since late 2018. We're still, relatively speaking, silver compared to gold is extremely cheap right here. So I think that would,
I sure hope.
Yeah.
And Tim, this is
the charts are right.
This is
part of value situation. This seems to be a good value. So,
and this is part of your newsletter service for those that subscribe.
Right. I do actually the S&Ps and gold,
and
I've been putting quite a bit of gold stuff up over the last 6 months or so, because all the bigger term, longer term charts, the Bollinger Band pinch on the monthly charts, and the cycle worked. even, pointing out the 4 months up in a row usually is a good sign that, gold GLD here will probably continue. So there's a lot of good stuff showing on the charts. I think everybody is disinterested now, so the money's not there yet. But
so you would look for a break above that 130? Is that
that's
the
130.
neckline?
Yeah, this price by volume, going back to 2007, the biggest, where all the volume is, where all the most of the purchases are between 120 and 130. Once you get through that area becomes strong support. So I mean, we're banging against it right now, and we got the RSI on the monthly chart above 50. So it's not a bearish picture, but it does look like a head and shoulders bottom. You got a neckline right there. The SOS means to get through that neckline, you need a sign of strength, which
so
goes along with
volume.
Pardon?
You'll look for volume on that break?
Sign of strength is a wide price move with volume.
Sure.
And that's what the SOS stands for. So, and we're right there. I mean, we'll set there for the next 6 months. I kind of doubt it. Either we're going to bust through it or we're going to back away from it. But we've been trying to bust through it, and this is the third time up.
Yes.
So a lot of times, third time is charm.
Exactly. Well, let's see if your presentation affected the poll at all that you brought in.
Okay.
Check out those results. All right. Well, you've got more than half of the audience that is definitely feeling bullish.
That big core indifferent.
Was that where did you go, Mary Ellen? Bull, bear, indifferent?
Well, I've been watching Tim's presentation, and I want to go in gold all the way.
There you are, bullish.
I'm going to wait for that break above the 130.
In all honesty, I did put indifferent, not because I don't like gold, but it's taking so long to do something. It just seems like it's been in this trading range for years.
Yeah.
I mean, I think that all of the technicals are there, but I don't know if it'll last into the next 2 years. That's why I put indifferent, because I think right now, yes, I'm very bullish, but whether that'll continue or not, I mean, of course, a lot of that will depend on the dollar.
Yeah. It's whoops.
There we go. More people.
Oops. I went back up again.
Well, it was absolutely great having you on the show today, Tim. Like I said, I see your name in the Timer Digest regularly on those lists of market timers that are in the top 10 here and there. So congratulations on that, and hope to have you back sometime soon.
Yeah, I'm more than happy to come back. So Thanks for having me.
No problem.
Take care.
If you do want to read more of Tim Ord, he is in our Top Advisors Corner. I'm actually going to just steal the screen really quick so that I can show you where that is. But you just go up into the Articles tab. Get back here. So you go Articles. And then if you scroll down, on the right side is Top Advisors Corner. And you will get the abbreviated version of the Ord Oracle. And there is information on what he presented today. And also at the bottom, there's information on how to get his new book, The Secret Science of Price and Volume, and also how to get into the Ord Oracle. But it's now time for the 10 in 10. So Mary Ellen,
okay, we'll move along here. We're taking a look at 10 stocks that have been requested. The first one is Apache. The ticker symbol is APA.
All righty. And here we go. I'm going to use my chart style, everybody. So these will all be in the MarketWatchers live chart list at the end. So let's go ahead and get started here. Apache. So lows, obviously the support levels. Let's get that in there right away. There you go. And then it hit a low back here at about 24. It does look like it is rolling over. The PMO is still rising on a buy signal though. And let's look at what this declining trend is looking like right now. There we go. I'll make that a little thicker so we can see it. So it is in a declining trend. Broke out. It looks like it's going to be a failed breakout. Hit the 20-day. It's starting to head back down. You know, like I said, the PMO is rising, but it is quite negative right now. It's got that reading of minus 39 right now. And so to me, you know, it's not unheard of that even though you have the PMO buy signal, that you might not see it turn back over with this rounded top coming right at that 20-day EMA. So despite that, I am still a little bit unconvinced that we're going to get that turnaround just yet. And you can see OBV, we're getting a break also to the downside on that. So, and I will save this.
All righty. The next one is NovoCure, and the ticker symbol is NVCR.
Okay, well, I might as well just put it right in there. All right, NVCR. All righty. Ooh, interesting. Sitting at the top of resistance, banging on the door. It's trying anyway. You know, it hit there. It has been turned back. But look at the PMO. I think this is a really interesting setup here. Can't see it quite so much here, but in the thumbnail you can. We've got a bottom that is coming in above the signal line. So we got a little bit of a pullback here, which is nice. But look at really nice rising trend. It's hard to argue with something that looks that good right now. Where would be a breakdown point? Well, let's see. What can we get here? I'm going to draw it here. It does leave this little point out, but it does hit these bottoms. We've hit it. We're making our way back up. The key is going to be that overhead resistance. I'm, you know, looking at the PMO, looking at the scooter value. I would have to say that, you know, I would expect to see that breakout. We did fail the last time, but maybe it is second time being a charm. So we'll see.
Okay, the next one we have is the semiconductor index. It's SMH is the ticker.
All righty. Well, semiconductors, like I mentioned at the beginning of the program, getting hit especially hard right now. Okay, very important. Short-term support and also long-term support really lines up with these tops we saw back here in October through December. So good news seeing it bounce right there off of that support level. You do see that the PMO is rising, but it kind of reminds me of the one we just looked at. And you know, I would say let's go ahead and I want to look at this short-term support level here, resistance level that it hit. I'll drag it out just a little bit here. You know, I'm looking at this. If this turns back down, well, yeah, I guess not quite the head and shoulders. I suppose it could end up being with this being a left shoulder and this being the head, but we do need to see it go all the way back down. And when we do, the expectation would be a breakdown and it would take you down to these lows back here in December. You know, the market's looking a little bit weak. Semiconductors being in that technology space could end up, you know, having a problem. So at this point, you know, hitting that overhead resistance and turning back down is bad news. But the PMO is still trying to, you know, make that turnaround. Personally, I would be out because of that failure right here in the short term. It didn't even get to the top we saw back here. It didn't cover any of these gaps. It's showing weakness. 20 is going below the 50. Don't like it.
Yeah, that's been a tough area, certainly of the markets of late. But the next one has been quite a winner. It's HSY Hershey.
All right. Ooh, it's a winner in my book. All right. You know, it's not like a true parabolic here because, you know, it's not as steep. Honestly, it could continue with that parabolic. Oh, where am I getting? There we go. I'll try that again. So dot, dot, and dot. There we go. Better. All right. So, I mean, it has kind of a parabolic shape to it, uh, a little bit, which is always kind of, I'm always on the lookout for that. You can see the PMO is quite overbought. But overall, I mean, it's the PMO is turning back up and rising, and it's in staples. This is an area that has been doing quite well. Everything's lined up with those EMAs. So honestly, I would look for higher prices here. It just did a little bit of a pullback. So I would be expecting better things, to continue.
More upside there, huh?
Yeah.
All right. MRVL, Marvel, is the next one.
Excellent. Marvel, again, we'll look just quickly at some.
This is another semiconductor stock, and a little bit better standing than the index.
Yes. This is going to worry me if we don't come back up and start making that move to the upside. Now you've got the good news is PMO buy signal. This PMO looks a lot stronger, and look at the OBV, much better shape to that. So I'm going to put that right over here. So I like to see that as well. This, it is a short-term pullback. Semiconductors are struggling. Marvell looks like it's doing okay. Let me get this support resistance right there. Yeah, that lines up pretty much with the tops back here and that low. The PMO and the OBV are telling me we're not going to end up with a pullback all the way down to $21. I mean, they're telling me to hold on to it. So I would say I would hold on to it, but probably tighten up that stop a little bit. If you came in on the bottom here, I might just take my profits and not look back. But if you came in earlier on in the move, I would probably continue to hold in the intermediate term.
Okay, next one is in the transportation area. It's UPS, ticker symbol UPS.
All righty. And here we go. Looks like a reverse head and shoulders might be on tap here. I'm always looking at these patterns, probably way too far in advance of what I know I'm supposed to as far as the textbooks go. But here's that declining trend. It is, managed to get out of that. Let me see if that's, yeah, it was really a trend channel as well. So we've broken out of that. That's really good news. You've got that 5-day EMA just now crossing above on the top here. I would be looking up to filling a gap that starts way up here. PMO, look at that. I mean, really nice buy signal. It's hard to argue this chart at all. I mean, I think this one looks pretty good. I would have liked to have been in on the move when the PMO had gotten the buy signal, not necessarily now, but a nice little pullback. This could be a good one to get back into or get into. If you have it, I would hold it. So.
Interesting. Okay, the next one is in the aerospace defense. Big winner there. It's KTOS.
Kratos. There we are. Rounded top and really ugly PMO. I know that this area has been kind of hit hard, if I recall, Mary Ellen, with what's hot, what's not. I think defense has been one of those areas that have really not worked out. I'm going to thin that one out just a little bit here for us. So you can see the short-term support should have held right here, and it has not. It's holding the 20-day EMA slightly. It actually closed below it before. And then, I mean, come on, guys. A PMO sell signal in overbought territory. You can even see the OBV starting to round off top. I mean, there's just, yes, it's got a good scooter. But even if this were an intermediate term investment, I would probably go ahead and take some profit here just because this is such an obvious sell signal to me. I couldn't.
The PMO signal.
Yeah, absolutely.
Interesting.
All right.
And then the next one that we have is HYG.
Okay.
That's
corporate bonds. Wow, this is a good looking chart, actually.
High yield.
Yeah, this is a pretty good looking chart. Bonds have been having a great time. I mean, my TLT chart, it looks really good. This is interesting as a teachable moment here. because this looks like a declining wedge formation possibly here. Well, maybe not, more of a declining trend channel. But we got the breakout from that declining trend channel. We hit overhead resistance, so not a surprise to see it pull back toward the breakout point. But, you know, gosh, with a great looking PMO like this, I would be holding it. A lot of these I'm not going to say buy, just because if the PMOs, you know, oh, I didn't want that one. If the PMO is on that buy signal, it has been for a little while, I try to make my trades a little bit earlier. I do end up taking a little more risk because of it, but I also tend to do a little bit better. So I don't wait for I usually will wait for the signal or just before, but this one looks very nice. I would hold this on a watch list for sure, because I would look for a move to the upside here after this pullback.
And the next one is Budweiser, BUD.
Okay, making me thirsty.
All
All right, on those hot summer days we've been having, right?
I know.
Okay, PMO looks fantastic here. A nice undulating move to the upside. I like to see those slow moving bottoms like this, and with the buy signal, it's now in positive territory, so you gotta like that. Where's our support resistance levels? Okay, well, there's one, there's the other. Getting ready to come up to that overhead resistance, and actually there's kind of a little bit lower intermediary area of overhead resistance. Look at 50 cross the 200. I mean, everything's lining up really nicely on this. I would expect the breakout, at least a move to challenge it, and then look at their nice scooter as well. Circle that, moving into that hot zone. All right.
And we're moving into that last one. It's FTNT, Fortinet.
Okay. So Fortinet.
Yes.
Looks like, now see, this one is set up to the place where I would consider buying it.
Interesting.
And here's why. Look at the PMO. It's made its turn. It's very deliberately making the turn. We're not seeing any hesitation. It's made the turn in oversold territory. Looks like it's going to get the buy signal. It managed to get that above the 5-day EMA. Let me look at the support and resistance levels here. So that would have been, it didn't even go down to test that area of support before it turned back up. It managed to get up there before that. So let's look at this for resistance levels. I would go here first as a possible resistance area. Really, and of course the 20-day EMA. I would watch that very closely. But I don't need to see it pop above it before I would consider getting into it. Let's see.
Interesting. I would ask, how would you compare that to that PMO turnaround in mid-November? Of course, the market dynamics were different.
That's the kind of look I do like to see. And the buy signal did come in, and you did end up with a lot of noisiness.
Yeah, well, we had a tough period there, but.
Yeah, but even so, you can see there was a little dent in there. There was still not, I mean, it was not. This
as clean.
Pretty much totally clean to the upside. So
very good.
All right, that's it for the 10 and 10. There are the symbols that I just annotated, and they're actually in the MarketWatchers live chart list right now because I just uploaded them as I annotated them. So if you want to get a hold of those in my chart style, that's where you'll find it. All right, we'll be right with the final market update.
Market direction is the single most important thing all investors need to know. Get the advice you need by joining dozens of elite money managers and financial experts, including Steve Forbes, Paul Merriman, Tom McClellan, and Keith Fitzgerald at the Money Show Seattle June 15th and 16th. You'll hear real-time market analysis and learn which stocks, bonds, funds, and commodities you should buy and sell to build a safer, more profitable portfolio. Claim your free pass at seattlemoneyshow.com.
All right, it is time for our final market update. Not much a change in the market, to be perfectly honest. We're still looking at it down about 1/3%. Looks like the Dow is now down only 0.16%. NASDAQ is still down about 1/3, and the S&P 500 down 0.18%. New York Stock Exchange in negative. Looks like we're small caps have now hit some positive territory, which is good to see. Treasury yields are rising just again, but down for the day. Right here, we can see down for the day, but rising. TSX following suit pretty much with U.S. markets. VIX is moving lower for the day, currently at 15.93. Dollar is shooting right up there, but gold is also hanging in there. It is pulling back a little bit right now, but still up 58 cents for GLD. USO, bad day for oil, down 2.79%. And then TLT, holding pattern continuing the last 2 days, and it's continuing into today. And that's all I have for the final market update. All right, Mary Ellen, you had this great idea for the next segment, so I'm going to let you take it away.
Oh, you bet. Yeah, let's go ahead. What we're going to do now is spotlight on a sector. And this is a sector, as you'll see here, I'm looking at these sector rankings. You can get this on StockCharts.com from that initial page. And what it will do is immediately rank the performance by that day. But now you have this drop down. And what I've done is sorted each of the S&P sectors. Take a look at their year-to-date performance. We can see tech up here in the forefront, as well as other areas. But down here at the very bottom, we have healthcare. The healthcare sector is up only 6% year to date. So clearly a laggard. A spotlight on this because this sector is starting to come into favor. So let's go ahead and take a look at a chart of the S&P healthcare sector. This is XLV. You can see how it's really been languishing. Back in the beginning of the year, we had policy headwinds with Washington, thoughts of Medicare for all and so forth. It really hit the group. But we can see here more recently, it is coming back into favor and could potentially be reversing this downtrend. So with that in mind, what I'd like to do is go ahead and take a look at how you within healthcare can be able to uncover potential candidates. So let's go down to this initial page, sector summary. And what we can do from here is take a look at healthcare. I talked about it's picking up here recently. Clicking on to the name of the sector, it's going to provide you with these sub-industry groupings. And we can see that pharmaceuticals are picking up. I will tell you, if you hover over this, you'll get a thumbnail. And you can see that pharma stocks are, in fact, we can easily see a double bottom and the group starting to move, as opposed to biotechnologies. They are not quite ripe. They're not ready for prime time yet. But medical supplies is another very vibrant area within healthcare. Medical equipment, a lot of stocks hitting new highs. Healthcare providers got hit the most from those policy headwinds earlier this year. They still have work to do to reverse. So I would say your bright spots: pharma, medical supplies, and medical equipment. How can you, as an investor, uncover potential candidates? Let's go ahead and click onto the name of that grouping. And per usual, we will want to go ahead and sort it by this StockCharts technical rating. That's your scooter. And within these pharmas, from my work, I like to pay attention to some of these larger names that are up here in the forefront. This particular stock, ZTS, is hitting a new high. We can go down NVS, Novartis. This is a Swiss ADR. Let's see, as we drill down, if we can uncover. Now, here is Merck, certainly a well-known stock. Let's take a look at the chart for Merck, and we can see that the stock is poised to hit a new high. And this particular stock, Merck, is offering a 2.6% yield. Analysts are raising estimates for this year. The RSI is positive. MACD is also up here in positive territory, very constructive. They have a superstar cancer drug, Keytruda, that is continuing to move forward with continued FDA approvals. And they also have partnerships with other large firms with other very positively favored cancer type drugs. So we took a look at Merck. Let's see if we can get back to that list. And again, we're on the prowl here for some of these better known. Let's take a look at Merck, another well-known pharma stock. let's just see, because we just looked at Merck. So I'm going to go ahead and pull up the ticker symbols for a couple of other better known stocks within the pharma space. So let's take a look at GSK. This is an ADR. This stock actually yields 5.1%. You can see it's not as high volume, but they also have a number of products. Their specialty is respiratory products. Year-over-year growth is expanding. They have a new HIV drug. The growth numbers really aren't there. They're not quite as dynamic as a Merck, but we can see the RSI is positive, MACD trending positive. One other large cap name in pharma that we can take a look at is Abbott Labs. And you can see the stock this actually last week broke out of a 1 month base. Very good volume. RSI is positive. MACD is positive as well. Not as big a yield, 1.6%, but Abbott does have the highest of these three growth numbers, 12% this year and next. Analysts continuing to raise their estimates, and I am going to go ahead and leave it at that. But certainly food for thought. These healthcare stocks are coming back, but the political headwinds may reemerge as we get into the 2020 election, because it is a very hot topic button relating to drug prices, how it is going to be afforded as far as possible insurance and so forth. But currently, the healthcare group seems to be moving back into favor.
Yes, I thought I would just share a few stocks.
Of course.
And then we can move into Q&A. So I ran my scan. I actually had a scan that I wrote for the last ChartCon on healthcare. So I decided to go ahead and check it out. I ended up getting these 4 stocks. So I will look at these just really quickly. I'm going to first move them into my chart list so that I can manipulate them the way I like. And that is by candle glance first and foremost. So this gives me an idea of kind of what the stock looks like from, moving outside the box by looking at the candle glance. All of these have decent PMOs because that was what was in my scan. So I'm just going to walk through these 4 really quickly. PMO is turning back up here. OBV is looking pretty nice. You've got all that positive volume that came in on this move. We're backing off, testing that 20-50 area zone. Scooter's in the hot zone. So I do like Align Technology right now as far as the medical supplies. Watch the $300 level. And I say that just because I would like to see that support holding right there on those 2 tops. So keep an eye on that. I think we're in a position though to make that little bounce. And healthcare typically does well when the market's looking a little bit weak. I have a pharmaceutical here that I liked from the scan, Biohaven, BHVN. Looks like a pretty steep flag possibility here. It's quite a big flagpole though on 1 day of trading. So I don't think that I would put that much emphasis on that, but great scooter. OBV, we're still looking at rising bottoms currently. PMO looks like it might be ready to give us that buy signal despite the pullback, which is great. So we could probably see a bounce off that 20-day EMA if the PMO is on point right now for these. And then Vermilion was another I looked at. Mostly sideways trading right now. 200-day EMA is holding, and I'm not really as thrilled with this one. Just notice the PMO. It's trying to top below the signal line and move back into negative territory. So despite it coming up on my scan, I'm not liking the look of the chart right now. And then finally, West Pharmaceutical. There you are. Nice PMO buy signal just came in, managed to beat overhead resistance here at 120, that very short-term place. We are getting ready to hit some overhead resistance right around 124, and that coincides with that September-October top. That could be a problem. But boy, that PMO and all that positive volume coming in on this rally, I think this one's still looking pretty good. And that's WST.
And that was my Monday setup pick, WST.
Well, look at that. We do have very similar.
Yes.
I know we study the charts in a similar way, but there you go. Our spotlight on healthcare. All right. Well, we asked everybody if they wanted to ask us some questions. We've, of course, had questions that come in on the survey and that sort of thing. You guys were really kind of quiet out there. So I'll just be pulling a few that I did find that might be interesting. Some of them did come in for Tim, but I think we could have a good conversation about a little bit of it together, Mary Ellen.
Sure.
So honestly, I'm going to answer the first one that came in, and I did reply to it in the chat room. Everybody saw me looking at the PMO and how I was annotating it on the 10 and 10. And so the person wanted to know if I've gone over this. They looked at the Chart School article, which I'm glad to hear, because that's the first place I always point people is to that Chart School article. I did do a workshop on the PMO. I will probably be doing an updated version on it, but you should be able to find it on the StockCharts TV YouTube channel. If you go over there and do a search for, Erin Swenlin PMO, something to that effect, hopefully you will be able to find it there. But PMO is just a great tool that Carl and I came up with. Well, Carl mostly. I helped him with some of the algebra, but he came up with the idea, so I cannot take credit for that. So there we go. And as far as other questions, Mary Ellen, we did talk a lot about gold and silver, and we didn't look at a correlation chart for gold and the dollar. So that was one of the things I was going to consider. Did you want to talk a little on gold and the dollar together?
Yeah, well, I have to tell you, I am not a gold bug, if you will. It's not something I follow it, of course. It's a major dynamic part of the markets, but it's not something that I have a resounding knowledge base on. There's one stock, it's KL is the ticker symbol, Kirkland, and I actually own some of that stock. It's if you look at it on a weekly, it broke out of a base and it has a lot in the way of growth dynamics. But as far as individually and looking at gold, not my expertise. So but I would love to see that comparative chart that you talked about, the gold and the silver,
because the dollar. So I'm going to look at the one that I have. The one question that they had was, so if gold is going to be rising and stuff, how is that going to affect the dollar? Well, one thing that people do mix up a little bit is that it isn't gold that affects the dollar. It's the dollar that affects gold, because gold is denominated in dollars. And so what happens with the dollar does affect the relationship. But typically, if gold's on a tear, I mean, that's not actually affecting the dollar. It's part of it is the dollar is contributing to what's going on. So let me go ahead. I'm going to pull up my dollar chart, because I do have a correlation at the bottom. Not this one, that's the dollar. Well, here is the dollar. It is holding a rising trend. And look, it like bounced off, Mary Ellen, right off of that support line. Unbelievable. But now I'm seeing that PMO starting to go into that zero territory. I'm not so sure that this rising bottoms line is going to hold. But how does this affect gold? All right. So what I have down here is a 20-day moving average of gold to the dollar. So it's a really short term to let you know how correlated or not correlated they are. And notice that they're almost always negatively correlated. And that's because if the dollar rises, gold generally will fall. And so you can see right now that correlation is really tight. But what I like to look at too here is looking at a really long-term correlation. And that gives you a really interesting peek into what's going on here. So negatively correlated for a really long time, then no correlation whatsoever. And then now you can see as far as the 200-day goes, there is a positive correlation. So that to me says that in an intermediate to longer term picture, you could really see both the dollar and gold moving up. So I thought that's really interesting that, but the main thing is, Mary Ellen, is I know that people always are talking about gold affecting the dollar.
Mm-hmm. Right, right. And you're arguing otherwise.
Yes,
Mm-hmm.
exactly.
Sure.
But as you can see, I mean, the correlation can switch here. And if you, if we made it even a little bit lower, maybe let's look at no, let's just look at 100 days, kind of curious what that looks like. And there you go. So in a more intermediate term, we're still looking at that negative correlation, but in the longer term, there you are. So, okay, question I'm going to give to you, from what I see, is what's your take on commodities like wheat and corn? Because they've been selling off for a few years now, and it looks like they could be bottoming. So
I
know, right?
You got me. The only thing I know is what I've read as far as corn and the impact of the weather. It rained, so they had a very delayed planting season. Corn got into the ground at least a week later than it should have. So it actually was skyrocketing. But that's not something that I've followed up on since then.
Mm-hmm.
But certainly corn, if I knew how to bring it up here, it is a very attractive looking.
Corn. I think if you just type in.
Oh, perfect. Okay, that's a little too easy. Whatever. But yeah, this is exactly it. So this is that May planting season, horrible weather. And so we can see that the price spiked. And of course, with this type of advance, you'd look for some sort of a pullback. And it did just that. This is a daily price chart, and it is fast approaching these prior highs. And we're getting a nice pickup here in volume on this potential second thrust up with that RSI up and your MACD. So it certainly looks compelling. I know that soybean had a very similar looking dynamic, and wheat as well. So a lot of those weather related commodities appear to be really quite vibrant. We can take a minute, pardon me, while we're here, and I'll show for those of you, or do I have a minute?
Yeah, I stole the screen, but
oh,
yeah,
no, nope.
You have to wrap it up. So
you go, you bet, go right ahead.
Oh, I was just looking at wheat like you were talking about. It
okay.
Like a flag, we're getting a breakout short term. PMO still has room to rise. You can see it gets as low as -4, could get up to +4. Well, Mary Ellen, oh my gosh, this has been great.
Yes.
I'm going to put it really quickly on our what's going on here currently in the market so you can get a peek. We are still lower on the day. Looks like it's just going to be, sideways action for a little bit here. All right. Well, it's been great. I'm so glad you joined me. And just a quick little teaser, Mary Ellen and I are in development for a new show that will be premiering next month. So keep your eyes open and peeled for that one.
Yes, very, very exciting. All new and exciting.
Yes, exactly. So keep an eye out because we will be doing that eventually. So goodness. So hopefully we'll see the market start to make its move back to the upside, but I suspect we're still in for a bit of a move on the sideways too. Oh, and Mary Ellen, you're going to be back tomorrow.
So. I will be back. Yes. Tom's still out.
Yeah.
Well,
thanks everybody for being with us. And a quick reminder, we do air 5 days a week, Monday through Fridays at 1:30 noon to 1:30 Eastern. Have a great afternoon, everyone. And Mary Ellen and I will see you back tomorrow. Happy trading.